Hello friends, welcome back to my channel Quest for Knowledge. Today we are going to discuss corporate accounting, all 5 marks, important 5 marks. Okay, so let's go through with it. This is the first question answer. I have given you the answer. This is the manner you need to write properly all the general entry and you need to give the narration. So follow this, and I'm going to show only the explanatory narrations, I mean the journal entries. But the perfect thing how you need to write is like this, okay? I'll just give you a glance of rough work just for the explanation purpose, okay? First we'll discuss with the question. Sunshine Limited issued 20,000 equity. Students, this is very easy and a very important 5-mark question. So 20,000 equity shares is being issued for rupees 10 each and at a premium of rupees 2. So in this, in every time in allotment only we need to take the premium, okay, which is 2 rupee of premium and 3 rupee for the equity shares. Okay, so first when they get for the 2 rupees is for application, 5 rupees for allotment, 3 rupees is on first call and 2 rupees on the second and final call. All the shares subscribed and money were received except 100 shares on first call and 50 shares each on second and final call. It means 50, 50, 100 itself. Now let's go through with the journal entry. Whenever we are giving the application, okay, first what will get the money, so that is why first we'll write bank account data to share application account. So 20,000 of rupees 2 each, so 20,000 into 2, 40,000. You need to write the narration here, being share application money received. After that, whatever the money is received, we need to transfer it to equity share capital account. So that you need to give this entry that equity share application money, which is 40,000, has been transferred to the equity share capital account. So you need to write the narration here, being the share application money transferred to the share account. So that is it. After that, first you will invite for the call allotment, okay, and then you will get the money for the second time. So first this is the invitation entry, okay, that we are going to call up for the so and so money. So equity share allotment account data, which is 20,000 into 3, to equity shares premium account, which is 20,000 into 2, okay, to share capital account. Okay, why we are asking for this allotment is to equity share account. So here it should come, premium should always come on the debit side. I'm extremely sorry. To share allotment account data to equity share account to securities premium account. So overall 60,000 and 40,000, overall 1 lakh. This is invitation, okay, you are sending the invitation card. So it is the invitation entry. After the invitation gone, the people will start to pay. On that time you need to write bank account data to share allotment account. It means you have received the money. There is nothing there written in the narration that they received so and so only allotment. So here we have received the full money, so that is why 20,000 into 5, 1 lakh we have received. In that 60,000 will go for the share, 40,000 will be gone for the premium account. That also you need to define if you want to, and you need to give the proper narration of it. After that, again you are inviting for the call, okay, please come and pay for the call money. So that you need to give the entry equity share first call account data to equity share capital account. So the first call money is 20,000 into 3. It means your estimated money should come as 60,000. Now after invitation, how much the people have bought, okay, come and paid the money. By that, how much you have received? Bank account we have received only 59,700, okay, instead of 60,000. So 59,700, what is it? Means 100 shares, okay, has been not paid. So 100 into 3, 300 shares has been they have not paid the money, so calls in arrear. It means they have delayed this payment, so will come on the debit side. Overall 60,000 we need to write down, but this money only will get transferred. After that, now you are going to apply for the final call. Come and pay final call money, so and so, like that. You are sending the invitation. What? Equity share final call account data to equity share capital account, 20,000 into 2. Okay, which is estimated how much your money should come, 40,000. In this also it is written that 50-50 each the people have failed. It means 50 for second and 50 for final. It means 100. How much you are receiving now? Bank account data, which is 39,800. We need to receive 40,000, but we have received only 39,800 because 100 is the defaulters. Okay, so calls in arrear is 101. So 100 into 2, 200. Okay, in 40,000 if we minus 200, this will be our remaining money which we have received. So that is it. Like this you need to give the journal entry. By that easily you can get and score 5 marks. So what the thing you need to remember, first of all you will be receiving the money of application. Whatever the money you received, you will be transferring it to the equity share capital, and then you will invite for allotment, come and pay the allotment, and then the people will pay the allotment money, and then you need to call for the call money, and then people will come and pay the call money, and you need to minus and deduct the defaulters as call in arrear, and then you need to invite the people to come and pay the final money, and then what the money you finally receive, in that whatever you have not received will come under this category, calls in arrear category. I hope you all are clear with this first sum. Thank you so much for watching. So we'll move on to the second question, which is distinguish between shares and debenture. What is share? What is debenture? It's a very interesting topic. Let's discuss. So share represents ownership, okay, and share is generally issued by a company immediately after incorporation, and debentures are generally issued after later stage, and the capital share is considered as a capital of the company. Debenture is a loan, okay, and the shareholders are the owner of the company, and the debenture holder is the creditor of the company. Shareholders have the voting rights, which debenture holders don't have any voting right. Shareholders are entitled to get dividend, and debenture holders are entitled to get interest. So dividend is paid on the basis of profit, but debenture interest has to be paid on the basis of percentage of fixed interest, whatever the company may face profit or bear loss. No, doesn't matter. And the rate of dividend varies, but the rate of interest remains same in debenture. Okay, and then dividend on share is an appropriation of profit, but interest on debenture is a charge which is completely against of profit. Okay, so these all are the difference. We can distinguish between shares and debenture. You can give your own general differences also, like shareholders are the owners, and it's the capital of the company, but debenture is like a creditorship of the company, and we need to pay fixed interest for that. Even it's very general, you can write. Now let's discuss the third question. The net profit of a business for the past 5 years are 80,000, 84,000, 90,000, 94,000 and 92,000 respectively. The capital employed in the business is 8 lakh. Normal rate of return expected is 10%. Average capital employed in the average capital of employed, it means 8 lakh divided by 8 lakh divided by 8 lakh 50% will be the average. It is expected that the company will be able to maintain its super profit for the next 5 years. We need to calculate the goodwill on the basis of 5 years purchase of super profit, annuity of super profit, which is we need to take the value of annuity of 1 rupee for 5 years, and at 10%, which is 3.78. Okay, now let's discuss this question. Let's go through it. Net profit of business of 5 years is given, which is 80,000, 84,000, 90,000, 94,000, 92,000. Capital employed is 8 lakh. Normal rate of return is 10%, and average capital employed, which is 10% of average capital employed. And super profit for next 5 years is, we need to calculate from goodwill. So already we've discussed. In that we need to calculate goodwill, 5-year purchase of super profit, annuity of super profit. All of this we need to go through. The question is this, we have already gone through. The first step one is, first we need to calculate the ARP, which is adjusted average profit. It means first of all we need to take all this profit. Okay, how we will calculate adjusted average profit is by taking total profit divided by number of years. So all the profit is written 1 2 3 4 5 years. So when adding all of this profit, we get 4,40,000 divided by 5. By that we get the answer 88,000. So 88,000 is our adjusted average profit. Step number 2 is to calculate normal profit. What is the formula? Average capital employed into normal rate of return. So that average capital employed will take whatever the capital is employed. So that is 8 lakh into 10%, which is already given in the question. 8 lakh into 10% is 80,000 is our normal profit. First we need to calculate adjusted average profit, and then normal profit, and then super profit. So we have got the normal profit. Now step number 3 is to calculate the super profit, which is AAP minus NP. Now AAP is 88,000 and NP, which is normal profit, is 80,000. When we minus, we get the super profit as 8,000 rupees. The step number 4, now after calculating AAP, NP and SP, now we need to calculate goodwill. What is the formula for calculating goodwill? Super profit into number of years. So super profit is 8,000, number of years is 5, then we get the answer goodwill, which is 40,000. Now step number 5 is that we need to calculate the annuity of our goodwill. Okay, so the value is also given, okay, 3.78. So the formula to calculate the annuity of goodwill is that goodwill into annuity value. So what is 40,000 is our goodwill into the value. When we calculate, we find out the goodwill for the next in the next 5 years, it will be 1,51,200. So this is the goodwill on the basis of the, it is going to be in the expected going to be in our expected 5 years, the next 5 years. So this is what the question answer is. I think this will be helpful. Now the third question is, fourth question is, from the following particulars of Madan Limited, calculate the remuneration of managing director at 5% of net profit. So we need to calculate the remuneration of managing director, which is 10,000. So the PDD is also given, that is bad debts is 5,000, provision for tax is 75,000, depreciation written off is 40,000, loss on sale of investment is 35,000, depreciation available as per income tax provision is 35,000, net profit after considering the above item is 2,25,000. In this we need to calculate the managerial remuneration. So let's get started. We need to go through with the format to calculate managerial remuneration. In this clearly it is written, any kind of a salary we need to minus it, any kind of a depreciation we need to minus it, and in the we need to minus it, and we need to add provisions on bad debts, tax, loss on sale. Why? Because we need to minus profit on sale, we need to add loss on sale, and any kind of admission depreciation which is written off, depreciation allowed which has to be reduced, depreciation written off which has to be added. By that we can calculate the net profit to give the remuneration of the managing director. Okay, so sorry, yeah, managerial remuneration we can give off. We have already gone through with the question. Now we'll understand how to calculate the answer for this. We have gone through with the format, okay, so that the profit is already, the net profit is already given. In this we need to remove remuneration of MD, which is 10,000, depreciation allowed as per the income tax, which is 35,000. We need to remove only this two, and rest we need to add up, which is provision of bad debts, provision for tax, loss on sale. Why? Because profit on sale has to be added, loss on sale has to be loss on sale has to be added. Why? Because profit on sale has to be deducted, and any kind of a depreciation which is written off. Depreciation allowed should have to be deducted, depreciation written off which has to be added. By that our total net profit what we get is 3,35,000, and the percentage is already given that we need to allow 5% for the director as per the Companies Act 2013. When we take out the 5%, we get the value managerial remuneration as 16,750. The question is given here that the Bharat Company Limited has issued 10,000 equity share of 10 rupees each, and all the money received except final call, which is of 200 share, and which was at 3 rupees per share from Mr. Ram, we have not received. So the director forfeited the share and reissued for 7 rupees. Now we need to write the entry. In that we are going to add up the forfeiture and reissue entry. Okay, so let's get started. So here nothing is given, as per the final call itself will go through. First, now invitation is being given that come and pay for the final call money, that is 10,000 for rupees 3. By that we need to get the 30,000 rupees. Okay, while we receive, we are not receiving for 200 share from Mr. Ram, so that from we have not received, rest we have received 9,800 shares into 3, 29,400 we have received. We need to receive 30,000, in that we have received only 29,400. The rest is the calls in arrear. So now the director want to forfeit it, so we need to give the entry of forfeiture, so that we need to give the opposite of this. Okay, opposite of this entry. So here we have equity share final account data to equity share capital account, no? So it's the opposite. What is it? Equity share capital account data to share final call account, and to what is the reason is that because of the forfeiture. Okay, so this will be credited, forfeiture share account will be credited. That equity share capital of that like 200, so 200 of rupees 10. Okay, in that we have received 200 into 7, that is 1,400 we have received. What we have not received is the final call money, which is 200 into 3, that is 600. By that we have to give that, being the share is being forfeited. It means you need to understand it clearly. Invitations entry must be written in an opposite manner. Okay, which is equity share capital account to share final call account to forfeiture share account also you may write, or to forfeiture share account to share final call account also you may write. But this too is important. In the credit side you need to add up one more entry, which is forfeiture. Okay, now we have forfeited the shares. Now we are reissuing. When you reissue, you will get the money. Okay, bank account, he has reissued for 7 rupees, which is of 1,400. So the forfeited share is for the 600 rupee. Why do we forfeit it? Because he didn't pay 600 rupee. So to share capital we need to get 200. So need to compare that we have received 1,400, we were not received only 600. Instead, in that we have received again 1400. It means 1400 minus 600, then what we have the profit on reissue, which is 800 rupees. That money we need to transfer it to the capital reserve. Okay, so forfeited balance transferred to capital reserve account. This is the entry you need to give. You can easily understand. See, he paid everything. 1400 he paid, 200 into 7, 1400 he paid RAM. Only he didn't pay the final money, which is of 3 rupee, which is 600. So the share is being forfeited. When the share is forfeited, the share now belongs to the company. Now he can reissue the shares to somebody else. Now he reissued the share to another person for 7 rupee. Now again we received 1400 rupees instead of 600 rupees. It means the balance is our profit on forfeiture and reissue. Okay, so that money we need to transfer it to the capital reserve. I hope you all are clear. Let's discuss the second question, which is state the advantages of underwriting. This is like you need to know that one is theory surely gonna come, and one kind of a question from your shares is surely going to come. So prepare for this reissue and forfeiture, and the failures, both kind of entries, do prepare it, because anyone will surely gonna come for 5 marks. And one theory, which is advantages of underwriting, might be disadvantages can also be asked. And lastly, we discussed about the difference between shares and debenture. That question was also asked. Okay, now let's discuss this answer. So the advantages of underwriting is that ensures the company that necessary capital would be coming forth even if the proposed issue gets a poor public response. It is useful for new company to raise the capital, and underwriting generally company gets a large sum of cash at once because of the underwriters. And underwriting, it is an agreement which company be sure of getting the required capital on a so and so period of time. And there is a risk of discredit to a company due to the failure of public issue of shares or a debenture, and so that is why it is being taken up by the underwriters. So these are all the advantages we have already discussed. Now let's move on to the fourth question, which is following the balance sheet of a limited company as in March 2016, we need to calculate the equity value under net asset method after taking the following data for consideration. Debenture is given, current asset, everything is given. Okay, now let's discuss. Okay, students, will calculate the net asset method. You have gone through with the balance sheet. In that we are not going to take the consideration of this. Okay, we need to avoid preliminary discount on debenture and profit and loss account. Okay, first when we take a fixed asset 4 lakh, we need to take it. Okay, and then in current asset we need to remove bad debts because it is there in the question. So that 2 lakh 50,000 minus 10,000, 2 lakh 40,000 we have taken. So 4 lakh minus plus 2 lakh 40,000, our total asset is 6 lakh 40,000. Now we need to calculate all the liability. First we'll take the depreciation fund, which is of 1 lakh, and then debenture, which is of 1 lakh. It is already given in the adjustments that we have not paid the interest of 2 years, which is 1 lakh into 6%, 12,000. Okay, 6,000 into 2. Okay, by that we have not paid the 2-year interest, which is 12,000. That also we have written, and it is also written in the adjustment that we have not paid the liabilities. There is an outstanding liability of 8,000. So that from our current liability we need to add outstanding liability. So 50,000 plus 8,000, 58,000. By that, net asset which is available after going through with this all liability, 6 lakh 40,000 minus 2 lakh plus 60 70, 2 lakh 70,000. If we minus, what we get is, sorry, in 6 lakh 40,000 we need to remove this. By that how much we get is 3 lakh 70,000 of asset, and then in that we need to remove preference shares also. Why? Because the real owners are the equity shareholders, and here we are going to calculate net asset available for equity shareholder, so that in the last we need to remove preference shares also. By that this is the net asset available for equity shareholders, which is 2,70,000, and we need to divide by number of equity share which is there in our balance sheet, which is 30,000 shares. So 2,70,000 divided by 30,000, we get the answer, which is rupees 9 is our intrinsic value. I hope you are clear. It means it is very important to calculate the managerial remuneration. Here we have the question: Ishwar Limited earned the net profit of rupees 4 lakh after considering the following items: depreciation, preliminary expenses, provision for taxation, MD's remuneration paid, director fees, bonus paid, profit on sale of fixed asset, original cost and written down value, which is 22,000. So we need to calculate the net profit for the purpose of managerial remuneration and calculate manager director's remuneration at 5% of the net profit. We need to go through with this. So to calculate the managerial remuneration, net profit is given, which is 4 lakh. What another thing we need to deduct is remuneration of MD, fees of director, bonus paid, profit, which is the profit written down value method minus cost. So written down value method, which is profit on sale. Okay, so 20,000 is the written down value, price profit is 30,000, cost is 40,000. So in this we need to add up written down value plus profit, and then we need to minus it with the cost. So this is our profit, we need to minus it. Loss we need to add. Okay, depreciation also here it is given, we need to add minus it, and then here we need to add the preliminary expenses and provision of tax. Here by this we have got the answer 4,58,000, which is the net profit. In that we need to take out the 5%. By that we have calculated the managerial remuneration, which is 22,900.